quick summation from me and Samina. What stood out for me, no change in stance to my mind, that's the headline. CPI inflation seen at 5.4% for FY25, 4.5% in FY25, and mentioning that the job is not finished because need to be vigilant on new supply shocks. And, well, interestingly, large mention on debt sustainability for the world at large and how it could become a new source of stress for the world. I mean, in an EM central bank talking about the message for the world. And real GDP growth, 7.3% FY24, 7% FY25, which would make it the fourth consecutive year of growth of 7% or above.
Right, and also Neeraj, they were pretty explicit in stating that they are managing liquidity in a pseudo manner any which way. So after September, and that's what the governor indicated, that system liquidity had turned into a deficit after a 4.5-year gap, which we've actually seen and witnessed over the last couple of months. But after adjusting for government cash balances, potential liquidity in the banking system is still in a surplus. And that's what the governor said. They've also said they're nimble-footed and they will manage liquidity with repo and reverse repo. So the pseudo balancing of liquidity still remains the only way to manage liquidity. Their growth targets have, of course, been in line with what the NSO has said. FY25, the estimate is 7%. For FY24 stands at 7.3%. Inflation, I'll just quickly break those numbers down for you so you have some perspective on what it is. But of course, inflation as well is an unfinished task, is what the governor said. Neeraj Gambhir, Group Executive Treasury Markets of Axis Bank, and M. Kamakodi, CEO, City Union Bank, joins in. Neeraj, I'll start with you first. Are you surprised? No change in policy, no change in stance, and no major announcements on managing liquidity either. What did you make of these comments? In line, you think, or there's a little bit of surprise because while they talked about managing liquidity, they've largely said that they've been doing it and they're nimble-footed and will do what it takes when it takes.
Thanks for having me on the show. I think it's broadly on the expected lines, both on growth and inflation. In fact, I was a little bit positively surprised by the sort of assurance or, in some senses, the confidence that the RBI governor has on 7% growth for next year. Our own estimates are for a little lower, say about 6.5%. Nevertheless, it still continues to be it will most likely be another year of very strong, economic growth, and hence the sort of, I would say, reflection on the fact as to how fast you need to adjust rates. On liquidity, yes, we have seen Reserve Bank pretty active in the markets. We have seen over the last week itself multiple, repo and reverse repo auctions being done to make sure that the system liquidity stays. What the governor has said is not a new information. We all know that there is a very large government balance that sits there, which is causing this frictional liquidity in the banking system. The challenge is that this frictional liquidity shortage in the banking system is causing the short-term rates to actually spike up quite sharply. We've seen 3-month CD rates go up to as high as 7.8%, and that is obviously impacting then the cost of funds for the banks. So I think I'm hoping that with this renewed set of assurances that the governor has given, there will be some cooling off of these short-term rates. And I think he pointed out towards the fact that there has been some volatility in the short-term money market rates. So I think that's the key thing. If the overnight rates settle towards 6.5% and the short-term money market rates start cooling down, then I think this policy would have achieved what we would have liked to see in the policy.
Mr. Kamakodi, did no change in stance surprise you, or are you in sync with what Neeraj Gambhir just mentioned?
Yeah, just to add what Mr. Gambhir said, you also heard a statement which clearly said that probably from the earlier, policy announcements and all, you had more discussion on the Arjuna's eye on the inflation. And now it has been clearly spelled that, the things will be now, economy will be now getting ready for the growth, that all sort of, other actions will start and all. So it is definitely a little bit, we are positively surprised that probably happening 2 months earlier. Probably we were expecting this maybe in the next policy, but good that the support for growth will be more from where we are now. That's a positive point here. All other on rates and all are on expected line.
Neeraj, I know while we are focusing on a whole bunch of global cues and the fisc and the budget and the market borrowing, but the fact still remains that we will, or we have, and we should be taking a cue from what the Federal Reserve does. The fact that that market rate cut expectation has now been pushed forward, do you feel like until the Fed moves, the RBI, even if conditions are conducive, will be unable to move because the rate differential is very critical for an emerging market like us?
Yes, it is, and hence what the Fed does is also of quite a bit importance. Rate cut expectations in US have been pushed back by at least 6 months. I think the market was hoping to have it in the first quarter in March policy. Now we are looking at May, June, and even probably later, given the recent spate of data that we've seen in US. So yes, that does make the bar for a rate cut to move higher in India particularly. And also the fact that our growth continues to be strong. The task on inflation front is still not complete. We are likely to see a inflation outcome for this fiscal and the next fiscal, which is going to be higher than the target of 4%, basically means that Reserve Bank has no real hurry or a reason to cut rates anytime soon. And I think both of these factors need to be taken into account simultaneously.
Neeraj, that brings me to the next question, which is a little bit of a conundrum in my head at least. So core inflation has been easing in line with what the governor or the RBI would like, recorded at 3.8%. The fact remains that if it continues to fall and gets closer to 2%, this becomes bad for the economy. On the other hand, and of course, because of that, the headline inflation has also cooled off. But vegetable inflation continues to be a sore point. Non-vegetable inflation has also been going up over the last 4 years. So what do you think, in your opinion, needs to be done to tackle inflation in that sense? Because you can't, and the only thing the RBI can really tackle is core inflation, but we don't want that to fall off too easily, right?
But at the same time, if the headline inflation continues to stay high and volatile, and remember, food is a large part of India's consumption basket, so can't ignore it that easily. And if the food prices continue to stay volatile, it affects people's expectations about the future inflation, and hence, it is not very easy for a central bank like India, where headline inflation is the target, to start cutting rates when the overall inflation or the headline inflation is much beyond the target. So I think Reserve Bank can take comfort from the fact that the core inflation is low, and hence, it is not a situation of overheating in the economy. It is more of a supply side issue in the vegetable and food basket of products, but cannot really start cutting rates till such time the overall headline inflation starts cooling off, trends.
By the way, just take a quick detour and mark risk assets by and large before we get in Anubhuti, Sahay in the conversation as well. The Nifty, the bank Nifty, both are off. I mean, we have seen the PSU banks come off because there was a bit of a rally, but let's just mark the markets about not too much, but a bit lower. But the banks, and the PSU banks in particular, would be the ones. The bank Nifty is in the green, but the PSU banks have certainly come off, so that is to be kept in mind. A PSU bank index actually by and large okay. A few banks have certainly come off. Anubhuti Sahay of Standard Chartered Bank joins us right now on the show as well. Anubhuti, good having you. Thanks for joining in. Anything surprised you? I mean, one reference being made to external shocks in a meaningful way, particularly the debt that the developed world stands in, and how that is a source of potential future shocks.
Yeah, sure. I think there were 2 points which were of great interest. One, for the first time, we have seen a dissenter emerging and probably voting for a cut. This we have not seen, and our sense is, while there was just one vote in this particular meet, as we move further into 2024 and probably by June of 2024, we are likely to see 6 out of 6 votes in favor of cut. A fair bit of caution today, well justified, where the world stands today with the tensions in Middle East, and especially with the data surprising on the higher side in the US economy, and probably rate cuts been deferred there. So fair bit of cautiousness, which was a surprise, but the dissent for a cut was an equal surprise to us. Otherwise, broader on the policy decision, more or less in line with expectation. On your point about public debt to GDP, I think it's a very important point which the governor brought to the attention of the market. If we talk about the global level, there is a very high level of public debt. While it can be managed without impacting the markets a lot, especially if we look at the developed side, developed markets, it becomes a constraining factor for a lot of emerging economies, including India. And in case of India, while we all have applauded the budget, I think the public debt to GDP is something which is a factor on the minds of policymakers, and to a great extent, there is a great deal of focus to bring it down as soon as possible to ensure that the issue with the rating agencies about high public debt to GDP gets addressed sooner rather than later.
Okay. Mr. Kamakodi, small things, but he mentioned about how 2 or 3 very important moves taken at the end of, or virtually at the end of the policy, including allowing, resident entities to hedge price of gold, extending KFS requirements for all retail and MSME loans, because it's mandated earlier only for certain class of lenders. Any thoughts on those 3 or 4 announcements that were made?
Yeah, particularly on the, key factor statement is there for some time, but including all charges with the interest rate, let's say it will, we have to think over that, and probably some amount of saving on the GST will also be there, because if it is included in the, let's say, interest rate, if it is a charge, you have GST over and above that, and if it is in the included in the interest, you don't have the, let's say, GST part on that. Some amount of, let's say, thought should be put over there to take it forward, but it will be definitely, let's say, beneficial to the customers, and overall transparency will be getting better and better.
Right, we also have with us Keki Mistry, former VC and CEO of HDFC Bank, joining in. Hi, Mr. Mistry, thank you very much for taking the time to talk to us this morning. No surprises on policy, not too much of a change in the tone or the stance, more or less on expected lines, or would you have expected or liked a slight change in stance, commentary maybe? He hasn't even said much on liquidity in that case.
I don't think I would have expected too much of a change, given the fact that the external environment continues to remain uncertain. Like you've seen that, you have 3 wars going on, 2 wars going on, and 1 near war going on. You have this Gaza issue, you have the Ukraine-Russia issue, you have this, conflict between US and Iran. So in that kind of an environment, things can be very uncertain. You could have a sudden change in oil prices, sudden change in sentiment. So given all of that, I think RBI will continue to be watchful. My sense is by the time we come to, let's say, May or so, around May, RBI will get a better fix on where they expect the monsoons to be, and whether we expect a normal monsoon and therefore normal, agricultural output, and then maybe act in terms of lowering interest rates. But I still believe that once the macro environment stabilizes, and if we don't have any surprises on the monsoon front, we could look at a rate cut coming sometime in May, maybe even in May, June.
Mr. Mistry, good morning. Neeraj here. Just wondering, did the confidence of the Reserve Bank of India on growth surprise you precisely for the reasons that you mentioned, with the conflicts going in and world growth slightly looking dodgy? Is 7% number that the Reserve Bank has set, did that surprise you?
No, not at all. If you ask me personally, and I've said this before also, in my view, a growth may even be slightly higher than 7%. We are not that much dependent on global factors as the rest of the world, in the sense that our economy is largely domestic economy, and as long as we are creating jobs, people have jobs, they have income, they are spending money, consumption is there, manufacturers are incentivized to produce more. Because they are producing more, they're hiring more people. So the economy is on a roll. And there's a multiplier effect to these things. So I'm not at all surprised. In fact, I would believe, in my opinion, that we would end up with a number higher than 7.
Okay. Mr. Mistry, appreciate that. Thank you so much for taking the time out and being with us. Really appreciate your time. My colleague Vishwanath Nair is now standing by with the key highlights of the policy and what stood out for him. Vishy.
Right, Neeraj. So we expected a dovish sort of policy, but then, of course, the RBI governor came in and delivered a slightly more hawkish tone in his commentary. Now, of course, the point that we have to watch out for is that 6th policy, again, status quo. The stance remains the same as withdrawal of accommodation. But the RBI governor's main point is that there is a lack of transmission. There is an incomplete transmission happening in the credit market, for which reasons he didn't explain during his speech. Maybe later in the press conference he will explain it. And the other main point is that the inflation is still away from the 4% target. So those two things are the most important driving factors of what future decision making on the monetary policy front are going to be. Now, if you look at where the RBI is projecting inflation for this financial year as well as the next financial year, FY25 is expected to be around 4.5%. Inflation hits 4% at some point in September, and then later on in the following 2 quarters of the next financial year, you will still see inflation remain higher than the 4% target. So that's something that you need to watch out for, and how that influences the RBI and the MPC's decision making. Liquidity front, I heard Samina say that they didn't make any clear announcements on liquidity. That's true, they didn't, but what the RBI did say is that they will continue to do two-way moves, which is infusing liquidity when needed and absorbing excess liquidity whenever the situation warrants it. So the RBI remains nimble as far as managing the system liquidity is concerned. On the growth front, the target of about 7% for FY25 sounds of a very, very strong growth momentum. The RBI governor has said that the strong growth momentum we saw in FY24 is likely to continue next year. Now, apart from all of these rate-related decisions, I think two important things that the RBI governor did talk about. One was on the key fact statement bit, which till this point in time was only on for digital lenders who need to issue a key fact statement to the customers, which details all the interest rate as well as other costs involved with a loan. So now that will be extended to all retail and MSME loans. This is intended to bring in more transparency, but of course this raises the compliance cost for banks and NBFCs who traditionally did not do digital lending. The other important bit is on the CBDC front. The RBI is proposing to bring in additional programmability. Now, to my mind, that's a bit of a dicey area, because the whole intent of bringing in e-rupee or CBDC is to make digital rupee the equivalent of paper currency. Now, if you bring in additional programmability, which is to say that this money can only be used for a specific purpose, if you bring in that kind of programmability, then you take away from that fungibility factor of the paper currency, and that takes it away from the commonality between digital rupee as well as the paper rupee. These, to my mind, were the most important factors to watch out for as far as the monetary policy announcement is concerned. Let's see what happens during the press conference. Specifically, I would really like to know what the RBI governor meant by incomplete transmission and what the factors behind those are.
Right. Thank you, Rishi, for that. Of course, Gus, you've got to run for the press conference, but we will catch you soon again. Neeraj, explain this to me, and we're a little perplexed at this stage. There was really nothing too exciting in that sense in terms of the policy, and I'm not saying that's a bad thing. No change in policy, not the governor not sounding dovish at all, in fact highlighting global concerns that could play or could be the jack in the pack. Why, I don't know if you've got a cue on this, and I know equity price is just one part of it, but PSU banks specifically are having a field day this morning. What are they getting excited about? Anything that you found that we haven't managed to catch?
No, nothing. I haven't really caught on to anything which I think should have a particularly impact on PSU bank shares. Could be one of those days when the market is just kind of looking at a particular segment. But in the policy per se, I did not see anything which has a positive or a negative bias for a particular set of banks.
Anubhuti, I want to come to you now. You did say that you're largely in line with what was expected, but anything more that you'd have liked to see in terms of commentary? There were some parts of the markets expecting maybe a slightly more dovish commentary, which in my opinion hasn't happened. And also with liquidity per se, the governor has maintained that they are nimble-footed. They will do what it takes, when it takes. Nothing too detailed in terms of liquidity management. Were you a little disappointed on that front?
On liquidity, I won't say that there were disappointments. Market always expects very explicit guidance or very strong measures when it comes to liquidity management in every single policy meet. But if you go, barring the ICRR announcement, which happened in the August policy decision, otherwise, very strong statements of liquidity have never, are usually not made during the policy days. They are made out of the policy days. So I don't think I would say that I'm disappointed to say so. Whatever is required, I think RBI will continue to do on the way they have been doing over the past several weeks. On your point about dovishness versus hawkishness, yes, we expected a little bit more acknowledgement on the way domestic inflation has panned out, especially given where core inflation is. And in fact, if we just step back and look at some of the comments which were made by the governor earlier in the year at Davos, his first interview where he sounded a lot more positive about the domestic inflation trajectory. That was missing in this policy statement. So our sense is this is primarily driven not by some fresh development between Jan and Feb in the Indian economy, but probably is weighed down more by what's happening globally. As I mentioned earlier, Middle East tension needs to be watched out because it has a lot of implication for oil prices. And also, if you look at the US economy and the pushback which the market in general has got on rate cut expectations from March to May, I think these are very important factors which any emerging central bank governor will have to take into account. So more cautiousness is primarily driven by global factors, in my view, rather than anything changing on the negative side domestically.
Got it. Anubhuti, Neeraj, Gambhir, lovely talking to you, both of you. Thank you so much for taking the time out and being with us. Mr. Kamakodi, I have one final question for you, and that is around whether the policy statement in some sense leads anything about growth for the banking sector, because there are a lot of question marks around credit deposit ratio, any which ways, and the extent of private capex and what it will do to growth per se.
See, even though you don't hear anything very specific or very pointed, the general message that what I say slightly different from my previous speakers, in the sense that now the period of focusing on the inflation targeting, there are multiple statements, but directionally things are cooling up. So eventually at least the light at the end of the tunnel is visible, and going forward you will be sooner than later you will start seeing the interest rate coming down, which should propel growth. And there was a specific statement which I could hear, which said something like from inflation targeting, now we are we'll start focusing how to support growth and something like that. So things have to, we should be getting for better days to come.
Better days to come. Mr. Kamakodi, I'd love to talk to you longer, but we're sadly out of time this morning. In the meantime, so thank you very much for joining us. But in the meantime, the markets are almost holding steady. Banks are having a great day. I guess it's a trading day for PSU banks. Nifty is actually inch lower, so my bad.
Nifty private banks are down, but PSU banks are doing well.
Private banks are lower. The Nifty itself is off. PSU banks, stocks like SBI, are looking exceptionally well placed in trade as we speak. Even PSU banks has come off just a little bit in the last couple of minutes. SBI trades the gain of 4%. But what is catching our attention is LIC has taken its peers along higher this morning. LIC trades with a gain of 8%. The New India Assurance is up 11.5%. General Insurance GIC is also trading with a massive gain of about 12%, turning out to be one of the top gainers on the Nifty 500. So those counters, again, catching our attention. Neeraj, I'm not sure whether this is just pure trade or there is
also the data
more
that
on,
came out maybe late
so
yesterday.
Data, what the Prime Minister said, and LIC earnings. I guess there are three good enough reasons for the insurance pack to trade firm. With that, completely out of time, but thanks for joining. There's a lot more programming on the other side, so stay tuned.